Hello guys, welcome to another market review, and we are gonna kick off by looking at the dollar. Last week we were expecting a bullish weekly close on the dollar, and we nailed that. Um, the reasoning was due to the fact that we were trading into the 2022 range lows, and we had a double bottom with a weekly or daily RSI divergence, and everything was just pointing to bullish momentum picking up on the dollar. Now, that doesn't mean that dollar has to go to 105 from here. It could very well do something like this, get below, and then we have another leg lower on the dollar. However, we have to remain open-minded, and I'm not seeing any long-term trajectory on the dollar, on any dollar pair. So moving on to the euro, I want to show you guys something, and that is the fact that we call this the summer range, where price spent the whole month of August. And I mentioned that the fact that we were finding acceptance back inside the range was something to see as bearish. And this is what we got last week. 3 straight days of bearish candles breaking below the range. So I think that more downside is to be expected. So now let me get rid of these lines and let's draw this more properly. Okay, this to me just shows that the euro has been moving inside of a bigger range, and the way I see it, it's pretty clear. This whole leg in June created this range, and we've been trapped inside that range. And this here was a deviation. This here, another deviation. So because we've broken down from the August range, the expectation is to keep trading lower. But we should not get lost in that vision, and we need to keep in mind where price really is, and that is inside of a range coming into range lows, which caused this deviation and a whole leg up into new highs for the year on euro. So there are two trades I am expecting to take on the euro, because next week we will have a new monthly open. We want to remain sort of patient and have the idea that we have a new whole monthly candle expansion to capture. We have to take that into account, okay? So the way I view it, this zone here, the range lows where deviation took place, is a magnet for price. And whenever we have a magnet for price, the expectation is that price will trade there. So we want to, it is way easier to make money if we go with price into that area rather than waiting for price to come into this area and then do something that we expect, like bouncing into take profit zone, whatever they might be. Okay, so my preferred trade for the following week would be to see, we will have a new weekly open around this level. Ideally, we see price grind out a bit on Monday, maybe Tuesday, failure to close above these highs, get back inside this percentile level, then get below the weekly open, then you can be quite sure that the high for the week is in right here. Then you have all the right to short this into this level. This would be my preferred idea, okay? Because I want to short, I would love to fade above these highs, but we don't need to see price trade this high, okay? We could, this is our weekly open, monthly open, which will be the same level for the next week. We could just see price start the week, maybe rolling a bit, and just chopping around the level, and then it breaks down and it just goes. Okay, so this is my preferred scenario because my invalidation is much clean right here, but I'm open to this one, okay, as well, where it's not as clean and it just sort of chops and breaks down, and maybe it does an attempt and fails to break above, okay, and then you engage short. I want to get rid of all of this. I think these range lows are really, really important, because if we look at the left hand side, we'll find that during April, this level here was a very clear resistance. We had this deviation, okay, which led to sell-off, but it was a very, very clean level. Then we move on to June, and around the same area, just a bit higher, we formed this resistance, which was again very clean. Not only was it resistance, but it was turned support. And if you see that, this is the origin of the whole June leg that created the range, that we're currently using. So this low here is significant and it should hold, okay? For the next week, my preferred plan is to short to meet this level with price, okay? Then I will look for longs, okay? But we have to remain patient because price, once it gets to a level, and that's why I said that it's easier to make money to just flow with price into a level of interest than waiting for price to get to your level of interest and then expect it to perform as you want to. Okay, I do think that this level should hold and it should provide a significant bounce. The same way I think that any attempt at this level is resistance until proven otherwise. Okay, and it should make price retrace. So just to sum it up, we want to get short on the first part of the week. Once we see a move up and failure to close above the weekly open, and once it gets here, you should be looking for longs, because I don't know, I think a bottom will be formed around this area, but we don't exactly know how. So maybe the next week we close around this area. So that means that on the next week you would have a new weekly open around this area, and then you can, much easily trade it up, and it all depends on when and how we get into this level. But I think the longs will be something to cover on the next week, because I'm pretty sure that we will be around this area, trading around this area, or that we will already have traded and maybe bounced a bit. Okay, but if we are going to bounce, this is the minimum target, and I would say the mid-range. So we will have plenty of time to get long. Doesn't have to, we don't have to be thinking that we're going to see this next week, a dump into the level and then a bounce into the mid-range, which could happen, okay? But it's not the scenario I'm working on right now. So let's move on to the pound. If we look at the pound on a daily chart, and if you recall what I mentioned last week, was that we were trading. So let's use the replay tool. Okay, we were around this area here, and I said, look, I think this line here, this level, is a magnet for price. It's the same logic I've already mentioned on the euro. I don't care what price does once it gets here, but I think it's going to get there. So my bias on GBP was to short. I didn't want to long GBP last week because of this, and well, this is what we got. Okay, prices came into this level and now has SFP'd the level. Because I'm expecting the euro to tank a bit, and maybe the Aussie dollar as well, maybe prices chops around this area, and this doesn't have to be, an SFP and then prices trades up cleanly. I'm not too sure, okay? The fact that I've drawn out this box here, which was the previous accumulation before, deviating to the upside, deviating to the downside, and then starting this whole leg up, is because I'm open to the idea that we could see a flush here and then start recovering this and then move into the mid-range, because we will have a monthly open around this area. Okay, so let's imagine we have a monthly open just like this for the whole month of November. It wouldn't be too crazy to think that we could, make the low on the first half of the month, and once you see it reclaimed, then you engage on the longs. So on the pound, I have two scenarios and both require patience. Okay. So what I want to do, you either wait for price to come into this area and you bet your house that this is going to hold. You look for bullish PA on the anticipation that you're going to meet the monthly open, and if you don't trade long here, you could always wait for price to come into the monthly open, reclaim it, hold above, and then trade higher. And these numbers line up because what I've drawn out is, if you measure it, it's about 400 pips, which is the average that you see on normal months like this one. But you could get, even more bullish price action. You could get a dip here and, 500s to the upside. That would take us around here. Totally possible, okay? So this is the scenario I'm working on right now. But yeah, we will revisit this next week as we'll have more data, and because if it's traded below and already reclaimed, it doesn't need to trade into the box and it's already showing bullish PA, we will abandon this idea and maybe think, okay, maybe it's ready to move higher. So let's get long on the GBP. And also because the GBP has been being hammered and is performed quite worse compared to the euro and the Aussie dollar, you know, that bearishness doesn't last forever. It might change at some point, and what better point to do that than at range lows, okay? So we will pay attention to this. Now let's cover the Aussie dollar. We were expecting a breakout, and it was due to the fact that we were consolidating on this range on the daily, and we had taken bullish liquidity. These two candles wicks, they point that out very cleanly, and we got exactly what we expected. We got a breakout and we had a gap, and that gap has yet to be filled. And on a reclaim of the weekly open, we attempted the monthly open, and from there we rejected and came back into the weekly open again, but the gap is still unfilled. So right now the Aussie dollar is in a bit of a tricky situation, because I do think that this gap is going to fill eventually, but I'm thinking something similar to what I'm expecting on the euro might happen here as well, where we see some bullish PA on the first day of the week, or even the two first days. Then you know, we see price trade lower and fill the gap. The mystery here is, what will price do once it fills the gap? Well, I would be surprised to see price not offer some type of bounce from this level, because this led to this whole move up, okay? However, there is a sign for concern whenever you have a range that leads into a breakout and price comes close to that same range. That is acceptance back inside the range. That is something I already mentioned on the euro, which led me to shift my bias to bearish, and I was right because of that, okay? Just reading this simple pattern. Acceptance back into a range that led into a breakout. Because what tends to follow, maybe some weeks above, yeah, failure to close, then you have this range develop and eventually just breaks down. And I'm gonna show you something that I saw on the euro dollar, euro AUD, sorry. So it's the same thing I'm explaining. You have a range, price breaks up, and swing fails at a key high, and when it comes back, you see it offered a small bounce, but then it got acceptance inside the range, and this is what followed. So this is why you don't want to see this if you are bullish. So on the AUD, what I want to do for the next week, and yeah, the only trade plan I have is just wait for price to show you some sort of bearish pattern around these highs and fade it on the premise that you're going to fill this gap. And I would exit my position here and then just watch what price does at this level, because it either starts a new leg, you know, starts building another base here, and then it probably trades higher, or it trades inside, and you know, in 2 weeks maybe you see price rotate lower, which I can totally see it happening, okay? But yeah, these are the scenarios I have in mind. Now I wanted to cover EURUSD because it is trading in a discount zone, and EURUSD has been stuck in this range since June. And you know, it took out this swing high, it took out this swing low here, and it's now back at the support zone of this range. We have some data, important data, that will affect the AUD on Tuesday. So I think there might be a great trade here because we are at support. You don't want to engage short here. I just don't think the risk to reward is there. Okay, and since we took out this swing high, price has been just selling off relentlessly, and something that caught my eye was this flat weekly open candle and this gap on the weekly open from last week. So one would think that these two things are a magnet for price, and you know, all gaps eventually fill, but they can remain open for quite some time, okay? And we should not always expect them to fill immediately. But because we're sitting at the range lows, I'm thinking that maybe the volatility on Tuesday could make price, you know, trade higher and fill this area. I'm not even calling for these highs around here. I'm thinking the gap could be filled next week because we have that RBA meeting and cash rate announcement, and we are trading into this support zone. And you know, the thing that makes me doubt is the fact that we've already come here. This is the third time. So how long is this going to hold? I don't know. You know, the more times you test a level, the less bias there is at a level. However, I think that because we already we have this gap, okay, and if it dips, if price dips, this zone represents the origin of a bullish movement. So even if it dips and takes out, you know, this low here, which I think it will, it could, you know, SFP this whole thing and just send price higher, which I'm curious to see how it lines up with the fact that I'm expecting the euro to come and put a bottom around this area, and AUD has this gap to fill here, and it is at a dangerous spot if it finds acceptance inside the range, because it could potentially lead to lower prices. So that whole thing is something to watch for because it's all really connected. But on AUD, I'm willing to take the risk and be aggressive on my entries, and I think at some point this low here will be taken, and I am willing to step in front of the bull and take this trade blindly. okay? Because I think this whole box should hold. And you know, if there wasn't any news, I would still think the same thing. It's the fact that we are at support, and that those news could just give up some volatility and make these movements possible. But the read on price should always be the same. It's just how we expect price to perform or behave around those events. Because if price is already at support, then you would expect that maybe the news causes a flash crash and then recovery, you know. And if it was at resistance, you would assume that, you know, maybe it spikes higher, but fails to close above a certain level and then just sells off. So the news are just there to take liquidity, but price already knew what it was going to do. That's the thing. So I would just blindly buy this low here, thinking that this is going to be an SFP. But if on Tuesday after the meeting, you know, we see price trade into this box, it holds, and we get another SFP and price closes above this level, I would think that maybe that low is in, and then that's another confirmation to add another position, tighten your stops, and get ready to see price climb higher. So that's one scenario for the longs, and I really don't want to engage short on Euro AUD. And I also have another scenario mapped out, which is it's not for the next week, because I don't think next week price will meet that price, but I don't know when it will happen, but I'm already prepared for it. So you see this area here, right, where price made this bottom, and you know it's created this whole leg up. It's massive. This area is massive, and this was formed because price traded into the origin of this April explosive move to the upside, which I think was related to some tariffs headlines or whatever, and people were thinking that the economy was going to crash. So this area here is massive. It's massive, and I don't know when price is going to reach this area, but I think it will at some point. If not this year, maybe the next one. And when it does, you want to get long with all your fucking money. I think this is a pretty good setup. The EURUSD has this I don't know how to say it. Normally, when it trades into very clean origin of moves, it behaves the same way you would expect it. So you just wait for price to come into the origin of an uptrend, and you're gonna get a bullish reaction. And the same thing goes with EURNZD. You know, if price was to come into this area, this is a great long. It's a great long. Look here. See when price comes close into this area, boom. No, it makes bottoms. And same thing here. You have an explosive move to the upside, and when it got retraced, it marked a bottom. And you also had that previous bottom here on the left hand side. So this is why I'm keeping an eye out for this. But you know, it will take some time. But when it happens, we'll be prepared and we'll catch this, and will be the best part of 400 pips. But we'll get there. We'll get there. And also, I think that at some point, if there's going to be a recession, dude, if EURUSD fucking hit this price on fake recession news, if something happened during next year, it should, it should trade much fucking higher. Yeah. So that's all I have for Euro AUD. I wanted to cover EURNZD because it's been quite some time since we last spoke about it. And EURNZD is the perfect example of a range that led into a breakout and got retested should look like. Okay. Instead of finding acceptance inside the range and then leading to lower prices, an attempt into the top side of the range was enough to fuel another leg higher. And EURNZD has been up only. I don't have any triggers still. I think it should keep going higher, and I would love to see an attempt at these highs, but I don't know when it will happen, but I think it will happen. This box here, this green box here, looks like a pivot level for me. So once price trades above and holds, I think it's a great long setup to take out this high at least, quite possibly this level as well. That is one scenario. Another one that I'm looking for is maybe this low. Take out this low and just bid around this area into the green box. And if it reclaims, then you have the other scenario mapped out, which was to trade into this high. So this thing here really is just a range. You can just trade it as a range. So let me get rid of some drawings. And you'll see. It's just a range. That's all it is. So really the same logic we were applying on the Euro USD was to buy the range lows. Why wouldn't you do the same thing here? And I wanted to show you guys something really special, which is AUDNZD. I think this is one of those macro charts that are quite revealing of how the central banks operate. Because if price has been kept in this range, it probably means that there's a peg, and the price and the performance of the AUD compared to the New Zealand dollar is engineered. So for the best part of 2025, we've seen NZD get smoked and AUD perform a lot better. That's why the Euro NZD has been up only this year. Look at this trade, massive. This is 2000 pips in a year. So if we come back into the AUD NZD, sorry, this is the wrong chart. I mentioned that I was expecting the Euro NZD to keep performing well, but I think at some point this is going to change, and we will see the New Zealand dollar be stronger than the Australian, because I don't think they're gonna let the Kiwi get smoked, because it would mean that they would lose this peg, and probably a lot of things would break in the financial systems. So probably it will be intervened, and I think that at some point we're going to see a spike above, and then a crash below, and it will be the start of a downtrend. So this is something to really pay attention to, because it will it will um, it will mean that it will tell us which asset to trade on the long side and on the short side. That's why this year I've only longed Euro New Zealand and not Euro AUD, and I've only shorted Euro AUD and not Euro New Zealand, because sometimes it doesn't make sense to short the strongest asset. So you just want to apply a long only strategy on some and a short only on others. So this is key. So we will keep an eye out for this scenario. And lastly, I wanted to cover the yen pairs. Well, if we look at the monthly chart on the USDJPY, very, very strong candle. I need to, yeah. On the weekly, you will see that price spent the best part of the summer trapped in a range, and it failed to close above this level, key resistance, and you see how on the weekly chart it closed just above. It's so clean, okay? When we look at a daily, you see the moment price broke out and gapped up because we had news. And you know, when you see a breakout outside of a range like this for months, you just don't want to immediately fade a breakout. And I guess a lot of people shorted around this area, thinking that the gap was going to close, but the gap closing would mean that all this range was for nothing. So that's not the smartest idea. Price clearly told us, looking at the weekly open, that it didn't want to trade lower. Look at all of this failure to break down, absorption, and closes above the weekly open, and then it started this whole leg up, and we are currently here. So last week, price sold off on the first part of the week and created this supply zone, which was breached once I think there was some news on the Bank of Japan, and that led to price breaking out, and this level is a key SR. So if the breakout is to remain, then you don't want to see this level breached, okay? Worst case scenario, you see, trade into it, leave a week, and then keep trading higher. But my conviction is not that high, okay, on the long side. I think this goes higher, but I'm not too sure on how to trade this. However, I wanted to mention something, and that is the fact that, well, if price created a range and now we have a key SR this area, price should never trade back inside below this range, this level, because once it does that, then this is your top, and then we are likely going to close this gap. Okay, so this could very well happen. Okay, In fact, that I think that this is what will happen, and it pretty much lines up well with how I'm looking to trade the euro and the GBP, because I'm expecting them to put a low and bounce significantly from there. So I'm expecting 200 pips on the euro, and well, you know, the yen moves a lot more, so but it is all lining up quite nicely. So maybe I would allow the yen to, I think the yen is going to perform well, maybe. I mean, the USD yen is going to perform well, maybe next week, maybe the first part of the next week. And I'd just be very wary instead of, in the case that it closes below this level, and, you know, then, you know, your top is seen and probably 148 is next. Okay. This is all I wanted to cover. Wish you all very good trading, and we'll see you next week. I'm really looking forward to it, since we will have the new monthly open and see what price has done, and quite possibly we'll be able to capture the entirety of the expansion of the monthly candle. See you guys.